Welcome to Stock Informer for you. The noise in the market is loud, but we prefer to let the data do the talking. Hero MotoCorp, the undisputed king of the Indian commuter motorcycle market, has seen its stock price cool down by nearly 24% from its recent peak of 6,390 rupees, now trading around the 4,850 rupees mark. To the untrained eye, this looks like a weak stock losing momentum. But if you look under the hood at the latest Q4 earnings and management's massive 1,500 crore war chest, a completely different story emerges. Is this market correction the ultimate entry point for smart investors? Or is there a hidden trap? Let's break down the hard facts, the numbers, and the secret investments outside Hero Motors that the mainstream media is completely missing. The core numbers. What just happened? First, let's look at the financial health. Hero MotoCorp didn't just have a good year, they had a record-breaking fiscal year. Full year revenue surged 15% to hit an all-time high of 46,830 crore rupees, while net profit skyrocketed 31% to 5,740 crores. Even more impressive are their efficiency metrics. A return on equity of over 26% and a massive return on capital employed between 32% and 35%. Best of all, the company is virtually debt-free. To reward shareholders, the board declared a massive total dividend of 185 rupees per share for the year. At the current stock price, that gives you a safe, massive dividend yield of nearly 3.8%, easily beating the broader Nifty 50 average. Q4, earnings call, and the margin battle. But if the numbers are so good, why did the stock pull back? The answer lies in the latest Q4 conference call. Management highlighted a sharp, unexpected commodity price spike in early 2026, creating an inflation headwind of about 2,100 rupees per vehicle. Hero countered this smartly by passing on a 2% price hike to consumers, protecting their core petrol engine margins at a stellar 17%. However, their overall consolidated margin dipped slightly to 14.5%. Why? Because Hero deliberately pumped 220 crore rupees in Q4 alone into scaling their electric vehicle business. They aren't losing money, they are aggressively investing in the future. The secret weapon: hidden external investments. Here is what most retail investors completely overlook. Hero MotoCorp is playing a masterclass game of strategic venture capital. Instead of building everything from scratch, they have acquired a commanding, near 40% equity stake in India's premium EV darling Ather Energy. If Ather goes big, Hero wins massive windfalls. Not only that, they've invested millions into Euler Motors to capture the electric commercial three-wheeler market, and $60 million into California-based Zero Motorcycles to co-develop high-performance electric bikes. They are completely de-risking themselves from the death of petrol engines. Will the price drop further? The risk factors. So, could the stock price drop further from here? Yes, and you need to watch two specific triggers. Technically, the stock is testing crucial floors. If it decisively breaks below the immediate support of 4,728 rupees on high volume, we could see a short-term slide down to the 4,620 or 4,500 levels. Also, mark your calendars for July 24th, 2026. This is the ex-dividend date. The stock price will automatically adjust downward by 75 rupees on this morning to account for the dividend payout. Don't panic when you see that specific drop. It's just a normal corporate action adjustment. The valuation verdict? At the current price of around 4,850 rupees, Hero MotoCorp is trading at a trailing PE of under 18 times. Compare that to Bajaj Auto at 27 times or TVS Motor at a premium 52 times. Hero is giving you an immense margin of safety. You're buying a highly profitable, debt-free market leader that pays a 3.8% dividend with a massive free option on the EV revolution. The smart money approach? Start accumulating this stock in tranches on technical dips, targeting a structural long-term recovery back toward the 5,690 plus zone. But what do you think? Are you buying this dip or waiting for lower levels? Let me know in the comments below. Hit that subscribe button for more institutional grade breakdowns, and I'll see you in the next video.